Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 119 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think could be useful to you in your long-term financial journey. Today, what we are going to talk about is the United States national debt and whether or not, as a country, we are going broke, because we all know how deeply indebted this country is. And so I think it'd be an interesting exercise and an interesting discussion to talk about what the national debt is, how the national debt can impact our lives, and what the ramifications of our nation having so much debt can be over the long term. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below as we go through this episode, and I'll be sure to get back to you there. If you're listening on Apple or Spotify podcast, then just be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that is good supplementary materials to the things that I'm putting out in the long form episodes every single day on YouTube and the podcast. And then if you need somebody to help you walk through your financial life, if you need somebody to help you to create a financial plan and keep up with that financial plan over the long term, I can help you to do that. Just go to my website, www.mnowithdylan.com. Click on the Work with Dylan tab, and you can choose the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. Now, the U.S. national debt. What is the national debt? Well, it is nothing more than the money that the United States government owes to its creditors, owes to those who it borrows money from. Specifically, the national debt refers to the level of federal debt held by the public as opposed to the debt held by the government itself. Since the U.S. government almost always spends more than it takes in, the national debt does continue to rise day after day. And this can be a troubling thought, especially knowing what we know about debt, knowing how debt can be negative and how debt can negatively affect our lives. It's important to note that the United States does have as much debt as it does. And I think it'd be interesting to just begin this conversation by talking about how much debt do we really have as a country? Well, that's a relatively easy question to answer, and obviously the clock is always running, but there is a website you can go to, usdebtclock.org, and it tells you the amount up to the second of United States debt that there is outstanding. And the U.S. national debt is currently standing at about $27.79 trillion. So this is a very significant amount of money that we owe to our creditors as a country. And if you go and you break that down by individual, so per citizen, that is $83,972 per U.S. citizen. And then per taxpayer, because obviously not all citizens are taxpayers in the United States, then per taxpayer you have $222,191 of debt. And then we obviously have a federal deficit as well. And so the current federal deficit, based on this national debt clock, is just below $3.2 trillion. And then the U.S. federal spending is right around $6.65 trillion. So these are just huge numbers that it's very, very hard to even imagine this much money and how we owe this much money. Now, a big thing over the long term that you want to be looking at to see if a country is in good financial shape or not is their debt to GDP ratio, because the GDP is the gross domestic product of a country, and the gross domestic product is nothing more than the summation of all goods and services produced in an economy in a given year. That is the GDP. Now, in 1960, the debt to GDP ratio was 53.37%. So the debt was 53% of the amount of GDP, the amount of goods and services we were putting out annually. And then it dropped by 1980 to about 34.5%. And so that's obviously a good thing. When your debt to GDP falls, that means you have less debt relative to the amount of production you are contributing to the economy. And then by 2000, it increased to 59.6%. But today, as it stands today, we are sitting at 130.57%. We are sitting where our debt exceeds our GDP as a country by about 1.3 times. And that is astounding. That is crazy. That is obviously not what has happened historically. We've kept our debt below our GDP output over the course of history, but that is no longer the case. And then the question really comes, is this problematic? Is this an issue? And obviously this idea of the national debt has been a big point of contention over the past few years, and especially in 2020 and 2021 as we are beginning this year, because there has been a large amount of fiscal stimulus pumped into the economy. There's been a large amount of money that has been pumped into the economy, and that money does not come from nowhere. That is a part of our federal deficit. That is a part of this national debt. Now, there's obviously a difference between budget deficits and the national debt. The budget deficit is nothing more than did the federal government bring in less in revenue, basically, in the form of taxes and the like, than we actually spent. And then the national debt is nothing more than the accumulation of the federal government's annual budget deficit. So as we have more deficits, the debt will continue to grow and grow. Now, answering the question of whether or not this is a problem, answering the question of whether or not having a lot of debt or having these large budget deficits is an issue, really comes down to, will the United States be able to continue paying their debt obligations over time? Will we be able to continue to service our debt over time? Now, obviously, there is the measure of debt to GDP, and that's something that is very commonly used, but sometimes that is not the best approach, because debt is not getting repaid with GDP. It is going to be repaid with tax revenues. And given that that is the case, then the question becomes, well, will we be able to pay down this debt as a country? And what a growing national debt does is it reduces the amount of tax revenue available to spend on other governmental services, because more tax revenue will have to be paid out as interest on the national debt, servicing that national debt. And over time, this shifts the expenditures and will cause people to experience a lower standard of living as borrowing for economic advancement projects becomes more and more difficult. So that's just one way in which this is going to negatively affect people over time, or can negatively affect people over time. And then second, as the rate offered on Treasury securities increases, so Treasury securities being the debt of the U.S., the bonds that the United States is issuing, that other countries are buying, that investors are buying, things of the like. So as the rate offered on those securities increases, corporations operating in America will be viewed as riskier, necessitating an increase in the yield on newly issued bonds. This in turn will require corporations to raise the price of their products and services to meet the increased cost of their debt service obligation. So over time, this will cause people to pay more for goods and services than they were previously. So obviously that is a negative effect on the economy and on individuals within the economy as well. And then also, as this yield on Treasury securities increases, the cost of borrowing money to purchase a home will increase, because the cost of money in the mortgage lending market is directly tied to the short-term interest rates. And we know that, and we have seen that this year as rates have dropped. Then we have seen a lot more people go out and purchase homes and take out mortgages. And given this established interrelationship between the yield and the mortgage market, an increase in interest rate will push down home prices, because prospective home buyers will no longer qualify for as large of a mortgage loan, since they'll have to pay more of their money to cover the interest portion of the loan. And this will result in more downward pressure on the value of homes, which will in turn reduce the net worth of all homeowners. And homes have been a way that individuals have historically built wealth in America. A large part of the net worth of individuals in the United States has been their paid off home over time. And if that is not going to be increasing in value over time, then that really puts a damper on the idea of home ownership, which shifts the paradigm again, which makes things more difficult for the individual. And then also, we consider Treasury securities, the Treasury bills, Treasury bonds, as having relatively risk-free rates of return because they are backed by the federal government. And as the yield on these securities will increase, risky investments such as corporate debt and equity investments will lose appeal, because anytime you can find a risk-free return that is very close to a return for taking a lot more risk, it will become more appealing to you to take that risk-free return. And this phenomenon is going to be a direct result of the fact that it will be more difficult for corporations to generate enough pre-tax income to offer a high enough risk premium on the bonds that they issue, and the stock dividends that they give, or the particular repurchases that they do of shares to justify investing in their company. And this dilemma is known as the crowding out effect, and tends to encourage the growth in the size of the government and the simultaneous reduction in the size of the private sector. Because if individuals are being pushed out of corporate bonds and corporate equities, then what will happen is the size of the stock market will decrease, the size of the bond market will decrease, and everything will be hinging very heavily on the corporate debt of the United States. And then lastly, when you have a country that is likely to default on its debt service obligations, so if as a country becomes more and more likely to not be able to pay the interest obligations that they have on their debt, the country will lose social, economic, and political power. And so, being the United States, we really pride ourselves on having social, economic, and political power within the world. But if we no longer have that financial power, if we no longer have the ability to pay those who have borrowed money from us, that can create some real issues. And this can really make the national debt into a national security issue. If we frustrate countries who have lent us a lot of money and have bought a lot of our bonds, and we can't repay them, then how do you think they're going to want to get that money back from us? We are going to have to lose power in some way in order to repay those who we owe. And this is a big issue. So you see that the national debt is a huge, huge issue with many multifaceted problems that just really permeate the society, that really will permeate the individual's life and really have an impact on us if this national debt does become too much to handle. And it has become a very, very huge issue. Now, you may think that debt in the United States is something new. Well, it is not. The United States debt is not something new. It has been around for centuries. Since the country's founding, we have had this issue of having to deal with this United States national debt. And we first found ourselves in debt as a country in 1790 on the back end of the Revolutionary War. And since then, debt has been fueled over centuries by more wars and the economic recessions that we have had over time. And it's really interesting to look in retrospect, in hindsight, and see what individuals thought about the amount of debt to GDP we would have by the end of 2020, and then what we actually have based on that number, that 130% of GDP number in the national debt that I was talking about earlier. And the Congressional Budget Office estimated that the federal debt held by the public would equal 98.2% of GDP by the end of 2020. Well, they grossly undershot that particular estimate. And they said if that proved to be correct, it would be the highest level since 1946. And since 1970, when the national debt stood at about 26.7% of GDP, which we are a far cry away from that moment. The national debt has gone through a few different periods, staying fairly steady through the 70s, rising drastically through the 80s and 90s under Reagan and Bush presidencies. It peaked in quarter one of 1994 at 48.3% of GDP, and then it fell to a bottom in the Clinton administration. And then, as I said, again, here at the end of the Trump administration, we are dealing with a huge national debt relative to our GDP. Now, for a little bit of understanding of how the national debt rose in the first few years of the Trump presidency, the national debt rose by 4% in his first 3 years in office, while Trump further slashed federal revenues with his tax cuts and Jobs Act. So in cutting taxes, obviously, that cuts federal revenue as well. The national debt didn't expand as sharply as individuals had thought it would. People thought that the national debt would balloon more given the lack of tax revenue, but it actually did not. But when the pandemic hit, that was just a whole different story. We have large amounts of money that were thrown into the economy. We've had multiple stimulus deals done, and this has just ballooned this amount of national debt to amounts that we could have never expected. And the question really comes, is it going to stay this way? Is it going to get worse? Are we going to get to the point of insolvency where we cannot make our payments to other countries and to investors in our debt? And how is this all going to play out? It is a very, very precarious situation to be in when your national debt is so high. Now, the question really comes here, like, can't we just stay on a budget? Can't we just, have these budget surpluses to where our national debt actually decreases over time? Can't we do that? And the answer is yes, we can do that, and we have done it in the past, obviously, because the national debt has fluctuated over time. It has gone up and down, and when it goes down, that means we have been working on a surplus. And the question really comes, what are we spending all of our money on? What are we spending all of this money on to where we are in a budget deficit? Apart from COVID-19 relief, I'm going to set that aside. I'm going to talk about some of the major things that we have spent money on historically and continue to spend money on as a nation that are eating up a large part of the budget deficits that we run, and eventually it runs into the national debt that we hold. So first, Medicare and Medicaid and other healthcare programs. So for 2020, a total of $1.3 trillion was allocated to healthcare benefit programs, which include Medicare and Medicaid. 1.3 trillion, and that's when we're sitting at over 27 trillion in national debt. Now, think what you want about public health care. Think what you want about spending money on those types of things, good, bad, or indifferent. That is a lot of money to be spending on anything, much less things that are digging us deeper into the hole. Obviously, Medicare and Medicaid play a large part in our annual budget deficits because, if we're sitting at $27 trillion plus in national debt, and we're spending $1.3 trillion in a year on the Medicare and Medicaid expenses for the country, that's very, very significant, because that 27 trillion has accumulated over time. That 1.3 trillion was just in a year. So that's one thing that we are spending money on. Then also Social Security and disability pensions. So these are aimed at providing financial security to retired and disabled individuals. The total Social Security and other expenditures are approximately $1.1 trillion. And again, huge amounts. We see these entitlement programs are a large part of our annual budgets, and they are very likely pushing us year over year into deficits if you take out COVID-19. That could be, a real big contributing factor to our continued deficits, these entitlement programs. Now, we also know, and for those of you who don't, I will reiterate here, I've said before, Social Security has a negative rate of return. So the money that you put into Social Security, you're not going to get all that money back, because the amount that you end up receiving back is actually as if you had made a negative return on an investment over time. So not only is this racking up national debt, not only is this pushing our budget deficits higher, this is something that is not even an extremely successful program. Yes, it is widespread. Yes, it helps many, many people, and I don't disagree with those facts. But what I do disagree with is that it is well managed, because it absolutely is not. You would think with that much money we would manage it better, but we don't. And then let's talk about defense spending, defense budget expenses. And there's a lot of talk about our defense spending and how it is far and away the highest in the world. And so $737 billion was earmarked for U.S. defense budget in 2020. That is also a ton of money to be spending on that. Obviously, we want to be safe. Obviously, we want to be in the best position of power as possible when it comes to the world as a whole. We want to be prepared for things that can occur. But we all know that there's a lot of bloat in these federal spending programs. We all know that there's a lot of bloat in these budgets for things like national defense spending. So again, a very large amount of money goes there as well. And then there are other miscellaneous expenses that go into our annual budgets as well. such as transportation, veterans benefits, international affairs, public education, and things of that like. There are many, many, many things that we are spending money on year after year. And what's interesting about it all is that the common public belief is that spending on international affairs consumes a lot of resources and expenses. But in truth, it is on the lower end of the list of the money that we are spending on things year after year. And what's really interesting, and this is kind of oxymoronic, but a lot of individuals that would believe, and rightfully so, that running budget deficits is not good, and running up our debt is not good, also are on board with a lot of those big three types of spending I was talking about when I was talking about Medicare, Social Security, and defense spending. And so it's like, which side of the fence do you want to be on? Do you want to be fiscally conservative, or do you want to continue to spend money in these entitlement programs and on defense spending? So it's just a big, big dilemma. And our national debt is definitely a big, big dilemma that could cause many, many problems over time. So then the question really is, how can we minimize our national debt? How can we decrease our national debt in a realistic way? Well, governments have many options when it comes to how can they decrease their national debt. Well, the first is monetization. So a country has its own fiat currency and can always simply create as much currency as it owes in order to pay its debts. Now, obviously, there are downsides to this as well, because as we talked about when we talked about inflation, that when you are just pumping money into an economy, when you're just printing money like crazy, then you are devaluing your currency, thus making things more expensive to the normal individual. And so inflation would likely run rampant if we were to do something like this, but it can definitely occur. Now, then you can also manipulate interest rates. Now, we've seen other countries do this over time. Maintaining low interest rates is one method that governments seek to stimulate the economy and generate tax revenue, ultimately reducing the national debt. Low interest rates make it easy for individuals and businesses to borrow money. And that is what is occurring now. Now, again, this can lead to inflationary pressures, because when money is too cheap, when it is too cheap to get your hands on money, then obviously the prices of things will rise because there's a lot of demand for the things that you have out there. Then a very obvious way that we can go about decreasing our national debt is to cut spending. And this can be difficult in two ways. First, each government expenditure has its own constituency that will fight efforts to cut that expenditure, making spending cuts politically difficult. And that's kind of what I was talking about when I was talking about Medicare and Medicaid. When you have those things, and you have Social Security as well, those entitlement programs that many, many individuals have been promised, and they're, the constituents of a lot of representatives and a lot of senators are really pushing for those things to continue coming to them, then it's going to be hard to get rid of those big, big spending items. And as long as it's difficult to get rid of them, it is hard to cut spending. And then secondly, if done during a severe economic downturn, like we have seen recently, if we were to cut government spending at that time, then spending cuts can damage the economy through a negative multiplier effect. Now, this can actually cut revenue enough that it can impair the ability to repay debts, so spending cuts must be done carefully. All I'm saying there is that if we have, this spending cut in the middle of an economic downturn, then you can end up in a place where you're not getting as much tax revenue and you are running the economy down at the same time. So this can be a big, big issue as well. Then the other side of that, so that would be the expense side. Obviously, there's the revenue side. You can raise taxes. You can increase taxes. And this seems to be a conclusion that has been taken by many Democrats that is likely to occur at some time during the Biden presidency, that there will be some push to increase taxes that will at least be back to the amount that taxes were prior to the Trump tax cuts that he had passed. Now, obviously, this is a way for the government to bring in more revenue to be able to pay down the national debt. But then the question becomes, is the government actually going to pay down the national debt? with the tax revenue that they are bringing in? Or are they going to try to implement more and more programs, do more and more of this frivolous spending? And you can see how the government is really not much different than an individual. Individuals, we have to budget effectively. We have to make sure we're in the green every month, but the government is just racking up the red, it seems like, and that can be a really big issue for us all, and it just continues to balloon this national debt problem. Now, then a couple other outcomes of this rising national debt could be a bailout. Now, a number of countries have been given debt bailouts, either by the IMF, which is the International Monetary Fund, and in the case of many countries through the past several decades, by the EU. So the European Union has bailed out several countries, as was most prominently the case for Greece during the European debt crisis. So this was in the recent past. Greece went through a big debt crisis and they had to be bailed out. And these bailouts often come with the requirement to impose harsh reforms on a country's economy, which would obviously be a big issue and would be a point of a lot of contention politically. And there is a lot of debate as to whether or not the structural adjustments that the IMF and other governing bodies are pushing on these bailed out countries is actually having a positive or a negative effect on those countries' economies. And then obviously there is default. We could default on our debt, and this could include going bankrupt and or restructuring our debt payments. So we could go into a place where we say, okay, well, we'll pay you this much over this amount of time. And it's really a common thing that occurs, and it can be very successful on the back end, but defaulting is obviously no good because you are losing your bargaining power as a borrower. So we can see that there are many landmines to this national debt issue. We see that this national debt issue is a big one, but it can have a real impact on our lives. And I think this is something that we really should be thinking about, at least as a country, over the next several years, because this is upon us. Our national debt is extremely high, and relative to our ability to continue paying that national debt, I really wonder how long it will be before we are in some type of national debt crisis. And so that's just my thoughts, not a doom and gloom episode at all, but a realistic episode to let you know what the national debt is and the potential issues that there can be with this type of issue that occurs within the federal government. Thanks for watching this video. If you could, go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below if you haven't done so already. If you're listening on Apple or Spotify podcasts, then just make sure to subscribe there and leave me a review. Follow me on social media at MNO with Dylan, and that's good supplementary materials to all the things that I'm putting out daily in the long form podcast or YouTube episodes. And then if you need somebody to help you walk through your financial life with you, to create a financial plan that is specific to you and your family and can keep you accountable to that plan, I can definitely help you do that. Just go to my website, www.MNOwithDylan.com. Click on the Work with Dylan tab, and you can choose the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. So tune in tomorrow as we talk about the basic idea of supply and demand and how the understanding of supply and demand can help you to understand financial markets and your financial life as a whole. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.